It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
And welcome back to Trading Stocks Made Easy. It is I, Tyrone Jackson, the wealthy investor. Now, today we're going to talk about the money trail. Here's what I see happening in the stock market right now. I see billions of dollars flowing into certain stocks every day. Now, if you're a fan of Yahoo Finance and you know how to track money flows or trades, you can do that online for free. And when I start seeing big block trades where institutions are buying 5, 10, 15, 20 million shares every pop, and they're choosing a favorite sector, that is a clue that can make you a lot of money. But I want to talk to you about the money trail. Why does money flow in and out of the stock market at certain times during the year? All right. Well, you know how I'm always talking to you about keeping an open mind in the stock market? Well, today I'm going to ask you to keep that open mind. Why? Sometimes when I'm talking to you about trading, I'm talking about 200-300 shares. Maybe I'll give you a trade in 1,000 shares and you go, wow, a stock is at $185 a share. 1,000 shares is $185,000. Well, the truth is there's a lot more money than that in the stock market. When big institutions like insurance companies or banks or college endowments actually buy shares, it's usually in the millions of shares. You see, if you work for a living, you tend to think small. It's hard to imagine someone out there in our country, some institution actually purchasing 185 million shares in one day and selling the stock when it goes up $2 or $3. What can I tell you? It's a living. Actually, that $1 trade represents $2, $3, maybe even $4 million in profit when the stock is moving during the day. Now, if you can make $4 million a day, would you have a really good life? Yes. Well, how about if you get that $4 million 3 times a week? You see, people who manage and spend and trade in such big volumes, well, most of us will never meet them. Why? They're trading a bank or insurance companies for real weekly profits. So if a bank knows that they can take some of your money and they can trade on it, well, they start having 24, 25, or $30 million weeks. That's just the truth. But on this show, that is a lot for a lot of people to handle. So very often I talk about more reasonable trade or more quote unquote realistic trades. Well, reality is whatever you and I decide it is. But in the big money world of finance, we're talking millions of dollars flowing in and out of stocks on a daily basis. That can only mean one thing. Those who are rich and those who are educated will always make money in the stock market. What I like to do is encourage you to participate so you can be one of those people. All right, so let's break down the kind of money institutionally that flows in the stock market and where it's going right now. Well, the most basic form of money is a mutual fund. Now, a mutual fund is nothing but a basket of stocks that you put your money in and you allow a money market manager to trade on that money. Well, the law says that a hedge fund can only buy and sell certain stocks in certain sectors at certain times. So a mutual fund is nothing more than investors who are referred to as retail investors put their money in. Maybe they're only depositing $500 a month and willing to trust that money manager. The next level up, which I really love, is something called a hedge fund. Now, most hedge funds require $1 million to be invested or more from a pool of very, very wealthy people. Most hedge funds require that the person who is managing the money actually have at least $1 million of their money actually included in the fund. It doesn't have to be that way, but that's considered best practice. Well, when hedge funds buy shares, they're usually in million-dollar blocks. Why? It makes the math really simple. If I buy 1 million shares of something that moves up $1 during the day, intraday, during trading, I have a shot at $1 million on a $1 uptick in the stock. If I buy 10 million shares of something and the stock moves up $1 and I quickly sell the stock, well, that's 10 million. And high-frequency traders take large blocks of money and they try to get in and out of the stock as quickly as possible. They make money for their clients and they make a commission. Well, if you wanted to start a hedge fund and we were following the money trail, you may need some capital to actually run the fund in if you don't know enough rich people. Well, can you imagine? There are funds out there that fund hedge funds, and they're called, and I'm telling you, I'm not making this up, they're called fund of funds. Could you believe there are people out there who just fund hedge funds? Instead of you going around and looking for 1,000 people to give you $1 million, call up the one guy who's running a fund of funds. And that guy's job is to take all of his funds and find the most productive hedge funds that he can and let other people do the work. It's kind of like business. How do you get rich? Well, opening the right business and then hiring workers, right? Well, what if your job was moving money around on Wall Street? A, you wouldn't need that many workers, and B, you're waiting for a $1, $2, or $3 uptick in every stock that you own, which is how you generate your millions. Generating millions on Wall Street is not hard. You just have to have a discipline and understand the stock and various markets. So we've got mutual funds, which the average person can participate in. We've got a hedge fund for millionaires only. And for people who want to finance the hedge funds, we have a fund of funds. You see, the money trail on Wall Street goes really deep. In the U.S. stock market, when I talk to you about following the money trail, I'm not just following funds in the U.S., there are billions of dollars from overseas, places like Europe and Australia, that make its way into the U.S. market every single day. All of those funds competing for ownership in the same stock is what causes volatility. Now, for the average person, who cares about the stock market? But for you and I, the financially educated seeking to build wealth, it is our job to know what stocks are in favor. So here you go, right now, of today, in 2024, here are the stocks that are in favor that institutions like. For some reason or another, Apple, ticker symbol AAPL, is still a favorite of the big hedge funds and the fund of funds. Why? Apple has a large user base, it pays a great dividend, and the revenue is predictable quarter by quarter and year by year. Now, you've heard me say on this show, I'm not really fond of Apple because I think there's a lack of innovation going on at the company, but you know what? Institutions love it. What's another stock that institutions love right now? A little company called Microsoft, which is no longer just in the software business, they're in every aspect of our lives, including gaming. A large portion of Microsoft's revenue actually comes from the Xbox and the gaming division. Well, since gaming is becoming more and more popular throughout the world, Microsoft is benefiting from that trend. So let's stop for a second and let me clue you in on a trend. You see, now that there's no more appointment television, your favorite show doesn't come on just at 9:30 at night on NBC. You can watch it anytime. So other forms of entertainment are becoming relevant to the consumer, like gaming. Now, gaming is mostly a male electronic sport, but it is targeted these days towards males, late 20s, early 30s, who have six-figure income. So rather than running out to the local bar to catch the prettiest girl in the room, they will sit home and game with other people from around the world. So Microsoft is on trend in understanding that it's not just about software in this market, it's also about entertainment in the form of gaming. Now, when we come back, I want to share with you some other trends that are causing hedge funds and private equity, which we haven't gotten to yet, to own their shares. Don't go away. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
And welcome back. Now, you might have noticed very often when I'm hosting a show solo like this, I'll repeat the same thing over and over and over again, right? Because I've learned to be an excellent teacher, most people learn by repetition. So here we go. We talked about mutual funds, hedge funds, fund of funds, and on top of that, the granddaddy of them all, which is private equity. Yes. Now, what does private equity do? Well, it raises $500 million or more, and it trades publicly traded companies as well as buying companies that are privately held with the hopes of taking them public. Now, private equity's participation in the market is not as easily followed because private equity can buy shares through multiple corporations that they own and participate in Wall Street in a way where some of their trades are hidden, but their goal is just the same: fast money or predictable money from the stock market. They may not be covered call writers, but they're fast money traders. So when I told you at the beginning of the show, I'm watching money flows into stocks to see which stocks are the hottest, I'm watching big block trades, usually funded by private equity. And there's a special way to see them. So there is a lot of money flowing through the system on a daily basis in the U.S. market. And a company can be publicly traded on the U.S. market and publicly traded in, let's say, the European market. So there are a variety of ways to buy Microsoft shares and participate when they're in a strong upward trend. Now, one of the companies that I really like is a company called Netflix. You may have heard of them. Believe me, they're going to be big. Well, if you look at a 5-year chart of Netflix, you notice that the stock has appreciated handsomely, not just because it is popular, but it is popular for hedge funds and private equity funds. Right now, at the time of this recording, Netflix is the biggest, most profitable streaming service in the world. Every shareholder wants their piece of it. The only difference with Netflix, it has not matured yet to the point where it pays a substantial dividend. But the shares keep doubling every 5 years, courtesy of hedge funds and private equity. So, learning how to detect big money inflows is a skill. And that's one of the things that I want to teach you as we move forward in getting your financial education. Now, the final point of today's show is to motivate you, is to get you thinking bigger and better about your life, because you right now can participate in the stock market, as many of you do, but you don't always take into account big block trades and money flows. Well, there's always something to learn about the financial market, and learning how to easily spot money flows is important. Now, one other thing about big money flows into the stock market. Private equity doesn't always get it right. Sometimes a company can go in and buy 60 million shares of a company whose stock tanks. But they have ways of determining and managing risk, so even as stocks go down, they can make big profits. I love the stock market. I love what it's done for my life. I love what it's done for the wealthy investor students who follow my methodologies. But I want you to remember something. Being successful financially in the stock market really isn't that hard. It requires that you understand trends, revenue, and big money, big block trades. Well, that's going to do it for this week. Short, sweet and to the point. If you are learning something from listening to all these fast money shows, share this podcast with someone you think would get the thrill and understand the ideas and principles that I talk about in this program. To be wealthy from where you are right now, you just need desire and an open mind and the willingness to learn about Wall Street terminology, trades, investments, dividends, and stock splits, because that's what this market is all about. Hey, I gotta run, but I'll see you next week right here on the next Trading Stocks Made Easy podcast, or visit me at thewealthyinvestor.net. It's always great to hear from you. I'm Tyrone Jackson saying, see you next week right here at the Trading Stocks Made Easy podcast.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.